Yo, Rootsy back at you once again. All right, so we're on our second part of the basics of blockchain and Web3. All right, so let's get right into it. Number two, understanding centralization versus decentralization. Centralized versus decentralized finance. Okay, so first, let us cover what is centralized finance. Centralized finance refers to the traditional financial system we are familiar with, where banks, financial institutions, and intermediaries like PayPal, Western Union control the flow of money. In CFI, or centralized finance, your financial activities are managed by centralized entities that hold custody of your assets. So when you put your money in a bank, you don't really own it. The government can come and take it anytime they want to. They want to block you from sending money somewhere because of whatever issue they got, or if the money gets lost in translation because of them, it's still your loss. You can try to get your money back, but you don't really control your money. You're not really in control. It's not even really yours, right? All right, so let's look at some key characteristics of centralized finance. Intermediaries in centralized finance, transactions go through intermediaries like banks, payment processors, or government agencies. These intermediaries hold your funds and ensure the transaction is completed. Custody of funds. When you deposit money into a bank, the bank holds your custody of your funds. You rely on the bank to give you access to your money when you need it. Limited access. Access to financial services is often limited by location, credit score, or identity verification requirements. The KYC, know your customer. People without proper documentation or poor credit history may struggle to access CFI services. Slow transactions. Centralized finance can be slow and expensive. For example, international money transfers can take days and involve high fees due to intermediaries, right? So these are all the things that we're kind of used to dealing with. Like, you want to get a loan, you go to a bank, you can't get a loan. You want to spend a certain type of money, you can't take out a certain amount of money unless you're a certain status or have a certain whatever, right? Right. And okay, so we're all used to all of that. We have the banks like Chase, Bank of America, payment services like PayPal, Venmo, and then you got your stockbrokers and exchanges like NASDAQ and NYSE. But even the stocks exchange close at a certain time, and you got to put in your slip for the stock market closes, right? All right, so we're all familiar with that. Now let's talk about decentralized finance. By definition, DeFi is a new financial system built on blockchain technology that allows users to interact directly with financial services without intermediaries. Everything in DeFi is governed by smart contracts, which are automated and transparent. Okay? So let's break this down just a little bit. So DeFi is a new financial system built on the blockchain technology that allows users to interact directly with financial services, different protocols and different things. Like, you got Uniswap, you can trade tokens 24/7. It's always somebody around the world trading cryptocurrency. I like to look at it as our international our international worldwide money system. You know what I mean? Where there's always somebody trading, and these coins are going to hold the same value. These tokens are going to hold the same value if it's like an ERC20, or based off of the ETH value or whatever token value. If I sell it to somebody across the world, I'm still going to get the same value back. You know what I mean? And nobody is in between telling me that I can't sell to the homie in Russia or New York or Brazil or in Africa or the UK or wherever at any time, and it's none of their business because it's decentralized. It's for the people, by the people. That's what that means. And it's transparent, meaning everything is public. So, you know, everything that happens you can see. So there's no shady deals. We'll get into some of this. So some key characteristics are peer-to-peer transactions. In DeFi, you can lend, borrow, or trade assets directly with others without needing a bank or financial institution to facilitate the process. No intermediaries, like I said. DeFi applications, dApps, decentralized applications, operate through smart contracts, which execute transactions based on predefined rules without needing human intervention. Call it trustless. You don't have to trust it because it's a smart contract. I don't have to trust that you're going to pay me what I need to pay because the way the contract is set up is that it's not going to go through unless you dispense the right type of money or the right amount of money so that in type so that you can receive the product that you're asking for. It's a smart contract. It's trustless. You don't need nobody unless you have some kind of flaw. And of course, there's errors, but you have to get into security and all those different things. And that's why everything gets backed up, right? So, ownership of assets. Users maintain full control of their assets at all times. You to interact directly with your own wallet to perform transactions. And let me explain this to you. So when I had bank accounts, when I was on child support, I had bank accounts and I was trying to save up to get my kids bank accounts for when they go to college, and I had money in my account, their accounts, and I had stocks. Okay, so but because I was on child support and because of the back pay from when I didn't know I was on child support, right? They took my kids' money and they took my money. And then on another occasion, they took my whole entire stock portfolio, which today is worth $500,000 or more now. You know, that was years ago, and it's worth like $500,000 or more now. That's how I got into investing and everything. But because they took that, that's what got me into DeFi. Because with DeFi, nobody is allowed to take my assets that's in my wallet. Nobody can ever access that. And I like the idea of me being able to control my own assets without the government or somebody being able to just come and ransack my life based off of something somebody else did or made up in a nefarious way. You know what I mean? That later on will have to get rectified. To protect myself further, DeFi came in handy because I was able to put my money in there, make it grow, and participate in these different things and actually be able to survive as a person. You know what I mean? And like I said, global access. Anyone with internet access can participate in DeFi regardless of location or identity. There's no need for a traditional bank account. There is no need for a traditional bank account in any way. There's no need. You don't need a bank no more because you can bank yourself. You can be your own bank. Programmable money. DeFi allows for the creation of programmable financial instruments through smart contracts, enabling more complex financial transactions like yield farming, liquidity provision, and staking. And these are all different DeFi protocols that you can take part in so that you can allow your money to grow for you in a decentralized manner. You know what I mean? Really taking the control back, and making your money, making every penny work for you in a decentralized manner. Like little foot soldiers. Look at every penny as a little foot soldier that's going to go. They might get a little bit ahead of the time, but they're working for you around the clock to get money. Like, this is really possible. You know what I mean? It's not a myth. Magic internet money. Say it with me. Magic internet money. All right, so some examples of DeFi protocols. Uniswap is a decentralized exchange where you exchange one currency to another. You have Aave, which is a lending and borrowing protocol where users can lend out their crypto or borrow against their assets without a bank, and it's automatic. You don't have to get approved. MakerDAO, a protocol that allows users to mint stablecoins, DAI, by locking up collateral like Ethereum. So you lock it up, and then you're allowed to mint stable coins. because of the lockup period. You know, lockup period could be anywhere from year, 3 years, or whatever the protocol has set up, or however you may set it up. There may be a certain amount of time that you want, you know. So now some comparisons. Let's just do some comparisons right quick between central finance and decentralized finance. So with the first feature is control. And centralized finance is controlled by banks and intermediaries, and DeFi is controlled by smart contracts and users. Intermediaries in centralized finance are banks and financial institutions, and intermediaries with DeFi are none. It's peer to peer. There's nobody, there's no middleman. It's just me and you doing business. Custody of assets. So with centralized finance, the bank holds your money. In decentralized finance, you hold your own money. The accessibility in centralized finance, limited to location, credit, and identity. In decentralized finance, it's open to anyone with internet access. Transaction speed. In centralized finance, it can be slow. Days for international to send something. It may take days for you to get that money internationally, right? With decentralized finance, it's fast, within seconds or minutes. I can send $1 million to anybody within seconds or minutes in decentralized finance. And that's how quick you can get rich, too. Transparency. In centralized finance, it's opaque and it's controlled by institutions, right? It's very, very limited what they allow you to see. With decentralized finance, everything is transparent and is governed by code. Code is law. The fees with centralized finance is often high due to the middleman, and with decentralized finance, it's low fees. It's mostly network fees, and all depends on how fast or slow the network is. Lately, the network's been a little bugging versus what it was, but it's starting to amp up a little bit on Ethereum mainnet, and then innovation and flexibilities. So centralized finance is, as we know, slow to change and heavily regulated, and decentralized finance is a rapid innovation with new protocols, so it's on the move. So let's see, why does DeFi matter? DeFi, you know what? We'll save this for the next video. Until next time.